Ever felt like investing is a game only for the rich? Or that you need a fortune to even start? Well, I'm here to tell you that's a myth. Today, we're going to break down exactly how you can start investing with as little as $10. Yes, you heard that right, just $10. This is your complete beginner's guide for 2025, designed to empower you to take control of your financial future, no matter how small you start. Before we dive in, a quick but very important disclaimer. The information provided in this video is for educational and informational purposes only. We are not financial advisors, and the content shared here is not intended as financial, investment, tax, or legal advice. Always do your own research and consider consulting with a qualified financial professional before making any investment decisions. So you have $10, or maybe $50, or even just a few dollars you've saved up. The first and most crucial step is to understand why you want to invest. Is it for long-term goals like retirement? Or perhaps a shorter-term goal like saving for a down payment, a vacation, or simply building a safety net? Knowing your goals will help you choose the right investment strategy and stay motivated. Don't just think about what to invest in. Think about what you are investing for. This will be your guiding star. Once you have your goals in mind, the next step is to understand that starting small is perfectly okay. In fact, it's a great way to learn without risking a lot of money. Thanks to modern technology and new investment platforms, you no longer need thousands of dollars to get started. Many platforms have no minimum deposit requirements and even allow you to buy fractional shares of stocks. This means you can own a piece of your favorite companies, even if you can't afford a full share. The key is consistency. Investing a small amount regularly, like $10 every week or month, can make a huge difference over time due to the power of compound interest. Compound interest is essentially earning returns on your returns. It's like a snowball effect. The longer you stay invested, the more your money can potentially grow. Now, let's talk about where you can invest your money. For beginners, especially those starting with small amounts, there are a few common and accessible options. High-yield savings accounts, HYSAs. While not strictly an investment in the traditional sense, HYSAs offer a higher interest rate than regular savings accounts. They are a safe place to park your money while you're learning about other options, or for your emergency fund. The risk is very low, but so are the potential returns compared to other investments. Robo-advisors. These are online platforms that use algorithms to build and manage an investment portfolio for you. You typically answer a few questions about your financial goals, risk tolerance, and timeline, and the robo-advisor does the rest. They often have low or no minimum investment requirements and charge a small annual fee. This is a great option if you want a hands-off approach. Exchange-traded funds, ETFs. ETFs are like baskets of different investments, stocks, bonds, or commodities. When you buy an ETF share, you're investing in all the assets it holds. This provides instant diversification, which means spreading your risk. Many ETFs track a specific index, like the S&P 500, which represents 500 of the largest U.S. companies. ETFs are traded like stocks, so you can buy and sell them throughout the trading day. They often have very low expense ratios, making them a cost-effective way to invest. Index funds. Similar to ETFs, index funds also track a specific market index. The main difference is that mutual funds, which index funds often are typically bought and sold at the end of the trading day, not throughout. They are also a great way to achieve diversification at a low cost. Fractional shares of stocks. As mentioned earlier, many brokers now allow you to buy a fraction of a share of a stock. So, if a stock you're interested in costs $200 per share, you can buy $10 worth of it. This makes investing in individual companies more accessible. But remember, investing in single stocks carries higher risk than diversified funds. Choosing the right option depends on your risk tolerance, goals, and how hands-on you want to be. For most beginners starting with a small amount, ETFs or index funds offered through a low-cost brokerage account or a robo-advisor are often recommended because they offer diversification and simplicity. So how do you actually start investing? Here's a step-by-step guide. Step 1. Choose a brokerage account or robo-advisor. Do your research. Look for platforms with no or low minimum deposits, low fees, and a good reputation. Consider what's important to you: ease of use, customer service, available investment options. Step 2. Open an account. This process is usually straightforward and can be done online. You'll need to provide some personal information, like your social security number for U.S. investors, and bank account details to fund your investments. Step 3. Fund your account. Start with that $10, $50, or whatever amount you're comfortable with. The key is to start. Step 4. Choose your investments, if not using a robo-advisor. If you've opted for a brokerage account where you manage your own investments, this is where you'll select your ETFs, index funds, or stocks. Remember the importance of diversification. Step 5. Set up automatic investments, highly recommended. Most platforms allow you to set up recurring transfers from your bank account to your investment account. This automates the process, ensures consistency, and takes the emotion out of investing. Even $10 a week can add up significantly over time. Now, a few crucial tips for beginners. Invest for the long term. Investing is not a get-rich-quick scheme. The stock market can be volatile in the short term, but historically, it has provided good returns over the long run. Don't panic sell if the market dips. Focus on your long-term goals. Understand risk. All investments carry some level of risk. Generally, the higher the potential return, the higher the risk. Understand your own risk tolerance before investing. Keep learning. The world of finance can seem daunting, but there are tons of free, reliable resources online, like this channel. Read, watch, and learn. The more you know, the more confident you'll become. Don't invest money you can't afford to lose. Especially when you're starting, only invest money that you don't need for essential expenses or emergencies. Build an emergency fund first, typically 3 to 6 months of living expenses, before you start investing heavily. Be patient and consistent. Building wealth through investing takes time. Stick to your plan, be consistent with your contributions, and be patient. The power of compounding works best over many years. Starting to invest with just $10 or any small amount is absolutely possible in 2025. The most important thing is to start. Don't let fear or the feeling that you don't have enough money hold you back. Every dollar you invest today is a step towards a more secure financial future. Take that first step, be consistent, and watch your money grow over time. Thank you for watching. If you found this video helpful, please give it a thumbs up, subscribe for more content on personal finance and investing, and share it with anyone you think could benefit. And remember, the best time to plant a tree was 20 years ago. The second best time is now. Start your investment journey today.